Ant Group is reportedly planning to fold its financial operations into a holding company that could be regulated more like a bank. Alibaba owns about a third of Ant Financial, and this, of course, comes as China increases regulatory pressure on that company and its founder, Jack Ma. Joining us to break down the implications, Derek Scissors, resident scholar at AEI, and our own Deirdre Bosa. Morning to you both. Deirdre, if you could set it up for us a little bit, is there a sense out here that this is, a regulatory fix that's going to appease the Chinese authorities and investors can look past it, or are we going to be dealing with this for a while?
Well, over the weekend, the Chinese regulators said that Ant Group, as it's known now, should return to its roots in payments. So that spooked a lot of investors because its credit business has actually grown larger than its payments business, Alipay, which is where it started. But its credit is really the lucrative part that makes it, this fintech giant. So the fact that there may be a holding company may sort of allay some of those fears. However, it's essentially sort of a breakup, right? You're splitting this off and it's going to be apparently reportedly regulated like a bank. So it's not going to be worth that north of $300 billion valuation that it saw just before its IPO was pulled.
Right. Now, Derek, a big question for investors here is whether this is a targeted bout of pressure on Alibaba because of Jack Ma not being necessarily, basically frictions between Jack Ma and the authorities there, or if there's a broader sense out there that the government of China is looking to crack down on large tech companies that have gone outside their lanes or perhaps have gotten too powerful. What's your sense of that?
Well, I hate to give a wishy-washy answer, but it certainly started as the first thing, a clash with Jack Ma. The way these things work in China, it could end up as the second thing, a broader crackdown, which is to say, in middle of October, all of the problems with Ant Financial and the drain on the Chinese state banks, which is what regulators are worried about, were all known and nobody seemed to care. Jack Ma opened his mouth and criticized authorities. Now we have this investigation. So it appears to be political, aimed at him, could be solved by a move like this. But once the door is open to regulators and they start looking around, you never know what's going to happen. And Chinese track record is they may decide, well, you're the largest example of this, but there are plenty of others. Now that we've got you to do what we want, everyone else is going to have to turn their credit operation into a bank holding company or whatever sweeping fix they demand.
And is it your sense that the concerns are specifically about financial businesses and threats to Chinese oversight and control of the payments and credit system, or are other big tech companies potentially also going to have to be concerned about other regulatory measures?
I think this is concentrated on the financial side. The Chinese have this thing about antitrust that if you're a private company, you can't be a monopoly. And if you're a state company, of course, you have to be a monopoly. So you always have that risk of antitrust violations being directed at private firms. But this is a 1-2 combination of Jack Ma doing a very strange thing and openly criticizing regulators in late October, and also that his operation drains the most money from state banks. And that money that he's draining from state banks, ordinary deposits, is how China intervenes in its economy. So that's something that the big tech firms don't do. They may be threatening in some way, but they're not openly criticizing the government, and they're not draining money out of the state financial system.
Shepard Smith here. Thanks for watching CNBC on YouTube.